If someone asked you right now what your business insurance actually covers, could you give them a real answer? Most business owners can't. And that gap between what you think your policy does and what it actually does is where the expensive surprise lives. In this video, Commercial Insurance explained what it is, how it's structured, and how experienced business owners think about it differently than most people do. I'm Brian Woods with Integrity Insurance and Risk Management. We work with business owners, commercial real estate investors, and independent producers who are serious about protecting what they've built. On this channel, we break down insurance and risk management into plain language. No jargon, no fluff, just the stuff that actually matters when something goes wrong. Here's the first thing to understand. Commercial insurance isn't one policy. It's a collection of separate contracts that work together, or sometimes don't, to cover the different ways your business can take a serious financial hit. Think about the categories of risk your business actually carries. 1. Liability risk. Somebody gets hurt or you get sued. 2. Property risk. Your building, equipment, inventory gets damaged or destroyed. 3. Your income risk. Something forces you to shut down. The money stops coming in even though the bills don't. 4. People risk. An employee gets injured on the job. Each of these risks has a different policy designed to address it. General liability for lawsuits, commercial property for physical assets, business income coverage, sometimes called business interruption for lost revenue when you can't operate, workers' compensation for employee injuries. Having one of those doesn't mean you have all the others. And having all of them doesn't automatically mean that they're set up correctly for what your business actually does today. The most common mistake I see, a business owner gets coverage when they open, files it away, and never looks at it again. Every year it renews. Every year the premium gets paid. And every year that policy falls further behind the actual reality of the business. Revenue grows. You hire more people. You add a service. You sign new contracts. You move into a bigger space. The policy doesn't update itself to match any of that. When something goes wrong, a lawsuit, a fire, a storm, what gets evaluated is the policy that's in place, not the business you think you're running. That gap is where most coverage failures happen. The business owners and investors who manage risk well treat insurance the same way they treat any other major financial decision. They want to understand the downside, not just the cost. They're asking questions like, if my worst realistic scenario happened tomorrow, a major lawsuit, a fire that shuts me down, does my current coverage actually address it? Have my limits kept pace with what my business and my assets actually are worth today? Do the contracts I'm signing require coverage I may not have in place? That mindset is the difference between insurance as a checkbox and insurance as a real tool for protecting what you've built. Real quick, if you're finding this useful, subscribe to the channel. We put out new content every week on commercial insurance, risk management, real estate protection, and business liability, all in plain language. It's free and it'll save you from learning these lessons the hard way. A few problems I see consistently. Property insured at the wrong value. The policy limit is based on what the building was worth 5 or 6 years ago, before construction costs went up. If there's a total loss, the gap between the limit and what actually costs to rebuild comes out of your pocket. Business income limits that don't reflect real revenue. I've seen businesses generating $2 million a year carrying business income limits of $100,000. That limit was set when the business was smaller and never updated. It will cover a few weeks of loss, not the months that it takes to fully rebuild after a serious event. Contracts that require coverage that current policies don't include. Someone signs a commercial lease. It specifies a certain endorsement and coverage types, and nobody checks whether the policy actually meets those requirements. Then there's a claim. None of these are unusual. They're the result of treating insurance as a one-time decision rather than something that needs to keep pace with the business. If your business has grown, changed, or taken new contracts in the last 12 months, a structured review of your current coverage is worth having. Not because something is necessarily wrong, but because a claim is the worst time to find out something is. If this was helpful, share it with a business owner or investor who needs to hear it. And subscribe if you haven't already. New content every week. If you'd like to have a conversation about whether your commercial coverage is set up correctly for what your business actually looks like today, reach out to Integrity Insurance and Risk Management. The link is in the description. I'm Brian Woods with Integrity Insurance and Risk Management. We'll see you in the next one.